joined today by Stefan Michaelides and Guy Winterflood, CEO and Chairman of Sterling Digital. Thanks for joining me, guys.
Thank you.
Afternoon.
So the company's just listed this month on the Aquis exchange under the ticker ASIC, with an initial 4 million raised at 5 pence per share. Congratulations on the listing. Perhaps you can give listeners an overview of the company, please.
Yeah, of course. So Sterling Digital is a Bitcoin mining and energy infrastructure company. We specialize in Bitcoin mining, but with a unique energy spin, if you like. So
Hmm.
we target stranded and surplus natural gas as our energy source and turn that natural gas into electricity, and with that make produce Bitcoin via supporting the Bitcoin network.
Hmm. Okay.
Mhm.
So in terms of the Bitcoin mining then that you're looking to do, are you planning to sort of like have some sort of treasury function, or are you planning to sort of sell the Bitcoin as it's mined, or perhaps a combination of both?
We will have to sell a portion of our Bitcoins to cover OPEX, but a very small amount for what we
Hmm.
forecasted. We plan to retain onto the majority, if not all of our Bitcoins. Um, we will try to earn a little bit of yield out of the Bitcoins by potentially lending it to liquidity providers. Um, but yeah, our overall strategy is to keep and hold the Bitcoin long term.
Right. Okay. So as per your recent announcement, then you have purchased the generators now that will connect the gas sources to provide the power. What are your plans in regard to securing the actual source gas itself? Are any discussions in progress regarding this?
Yeah, we've got a couple of assets lined up that we're looking into. Um, we just need to make our decision on which ones we go with. So we've received our gas analysis for these
Mm,
sites already. And then we need to just see which of these gases work best with the type of generators that we're using. And then other criteria we've got to look for is, sorry, other criteria we would have to look for is access and whether the site is good for us to expand into and how long we can stay there. Um, so we've got a couple of sites that we're looking into. We anticipate to finalize that within the next before the end of the year, actually.
right. Okay. Um, Yeah, there's a few oil and gas companies themselves doing this, or attempting to do it.
Yeah.
We've seen a few announcements from a few companies on Aquis and on the AIM.
Yeah.
You're not an oil and gas company, right? You're a
No.
service level above, so
Yeah.
you're going to be literally the customer of the gas, and then your speciality isn't actually
Yeah. So
yeah.
we'll be buying the gas
Mm,
under something called a GPA, a gas purchase agreement. So we tie into the natural gas infrastructure, either at wellhead or off pipeline. And we either burn the gas on site if it's at wellhead. So
right.
you tend to look for well packages that have multiple wells. You tie those wells in together into a central gathering station or a flow site, and then we would set up our Bitcoin mine on that flow site and manifold from there.
Right.
Alternatively, if you're going down the pipeline route, you look for someone that already has tie-in access, that already has an off-taking ability for the natural gas, and then we could set up at that site also.
Hmm. So what region are you looking at then? We haven't talked about that yet. Are you looking US or other areas?
Yeah, our first site will be in West Texas in the
Right.
Permian Basin. Um, our management team, we have personal experience in building Bitcoin mining data centers out in Texas. It's a really good jurisdiction to do so.
Hmm.
Um, a lot of natural gas, loads of flared and surplus gas around. It's a good jurisdiction. A lot of our competitors are based there as well. So Texas will be our first site, and I imagine our second site will also be in Texas. But geographically, as a company, we're not limited. Our facilities are quite mobile, so we can kind of go where the gas is.
Right. Okay. I mean, are you essentially solving a problem for these companies that would otherwise have to flare gas?
Yeah.
So are you getting this gas potentially for free, or are you having to pay some sort of amount of money
Uh,
for it?
we- it's near free. It's near free. We like to give a little, in theory, we should be getting it for free, but we like to give a little bit of money for the gas to keep an incentive for them to keep the well open and flowing.
Mm,
Um, you can expect to pay anywhere. Well, I won't say, but you'll be generating your energy around 1 cent per kilowatt hour. So you can get these GPAs for really, really quite low. You're solving a problem. I mean, you've got the environmental problem that you're solving, where
mm,
this gas is no longer being invented or flared. So that's a great plus. And on top of that, for the producer, they're now earning a net back on something that they were burning before. So it's a win-win scenario for them as well.
mm. Yeah. Okay. Probably hence why it's becoming more popular. I mean,
Yeah,
like I said earlier, some of these
yeah,
oil and gas companies are looking to do it themselves, but I
yeah,
guess they would still have to buy the expertise in, so to speak.
yeah, yeah,
You're not going to run that model at all, though, are you? You're not going to, for example, say we're a service provider and you actually take all the you have the Bitcoin and we'll take a royalty or something. You're not interested in that. Your interest is in purely sourcing the gas and doing that yourself.
yeah. I mean, right now we want to mine Bitcoin proprietarily for ourselves.
Yeah.
Going further down the road, if we look at a franchise model, perhaps where um, a producer has a lot of gas and they want to eh, add to the capex or onto the technology side,
Hmm.
that's something that we could potentially look at where we could do some sort of a JV.
Yeah. Okay. So you've got the generators.
Yeah.
You are working on securing the gas sources. You've got a couple of potentials in play there. What about the actual mining equipment itself then? So the computers to mine the Bitcoin, and what sort of specs are you looking at?
Um, I mean, we're quite familiar with a company called Bitmain. We've worked with them for quite a long time.
Hmm.
We will be using Bitmain's S21 variants for this first mine setup. Um, a lot of the Bitcoin mining units themselves are already located in the US, so I think we'll be buying in US um, to power our first site.
Okay. And is that from included in the funds that you raised at IPO?
Yeah, yeah. Everything we raise will complete our first 3 megawatt site.
Okay. And is a 3 megawatt site like a one machine, is it, or is it maybe a few
So
machines run?
yeah, you've got it would depend on which units you're using. I mean, if you take an S21 for example, they're running around 3,510 watts.
Right.
So across 3 megawatts, you're looking at just under 900 machines, 900 ASICs.
Oh, right. Okay. And just a question that I
Mhm,
thought of just off on the
mhm,
fly there.
mhm.
If you go in and set this up, right, you're setting it up on site
Yep.
at the gas site.
Mhm.
Well, how do you manage security? I mean, you've got a lot of expensive equipment there.
Yep.
The Bitcoins could be mined on the computer. How
Yeah.
do you manage security?
Physical security, everything is in is it's gated. So you're inside a barbed wire gate. That's locked 24/7. We have on-site security as well, of the evenings, and then during the daytimes, we've got employees that are on site. So that covers that kind of security. And then in terms of cybersecurity, standard firewalls and
Okay.
but yeah,
Yeah, I hadn't thought about cybersecurity, but yes, of course.
yeah,
Because these
I think it's
the
also
big
worth just mentioning that
yeah.
the wallet is not located there. Of course, it's in the cloud, and as you mine a Bitcoin, it's sent on the web, encrypted into the wallet, so it doesn't actually sit on site.
yeah,
Oh, okay. And presumably that wallet is with the custodian or something that has got
Yeah,
their good security
yeah,
credentials in place as well.
yeah.
yeah.
So
The
we've got
machines,
a treasury policy to govern all that.
Yeah.
yeah. In terms of physical security, the machines are they're quite um they're quite big and they will be very difficult to steal.
Mm,
They're inside locked containers as well. And then
mm.
when if you were to steal a Bitcoin mining machine, it's password protected as well. So you would have to re-wipe the firmware, upload new firmware,
Right.
and it'd be quite a process. I think the people that are kind of interested in stealing anything crypto related are more cyber criminals as opposed to
Yeah.
brick and mortar criminals. I don't think there's going to be much overlap. The thing that you do have to worry about is people coming in to steal the cables. You get a lot of copper cable theft out in in West Texas
All right.
on these oil fields. So it's those are the kind of things you have to protect the cabling, which we bury all of ours. So we're
Okay.
kind of preempting this.
Yeah. Okay, let's talk about costs and potential revenues then. Obviously, you're going to be mining Bitcoin and they're going to be popping up every so often. So once you're up and running at the first site and the follow-up
Mhm.
sites, what are your projections in terms of, say, the number of Bitcoin that you might be able to mine over a certain
Yeah.
period, the costs of that to you, and how does that translate into projected cash flow? Do you have any targets?
Yes, it's very hard to predict how much Bitcoin we will be mining. You've got a few
Mm,
very variables that sort of dictate that.
mm,
Firstly, it will be our OPEX. Um, you've got the network hash rate or the network difficulty, which essentially tells you how many miners are online at any given time. Um, and the more miners on, the more difficult it becomes to mine Bitcoin, meaning your share of the reward per router becomes less. So the more miners come online, the more difficult it gets to mine Bitcoin. And that's generally increasing over time. So it becomes more and more difficult to mine Bitcoin. And then you've got the halving that's coming up in 2028, between April and May, I think. The Bitcoin that you're getting right now in terms of rewards, that will half
mm.
during 2028. Um, and then you've got the price of Bitcoin itself. If the price of Bitcoin were to go down, um, we would have to sell more Bitcoin to cover our OPEX. Um,
But
but
is there a floor on that? I mean, do you not have a basic cost level where like I don't know, say 15,000 to mine a Bitcoin?
yeah, so right now it would cost us around $20,000 to mine a Bitcoin.
Okay.
Around $20,000. But you have done like but as the Bitcoin price comes down, the network difficulty will also come down because miners that are paying 5, 6, 7 cents for electricity would have to start turning off their machines, which means more machines are coming off the network, which makes the network difficulty less
Mm.
difficult, which means the ones who are remaining will be mining more Bitcoin during those times.
Yeah,
So
yeah.
it's kind of a balance. But as it stands right now, it's costing us around $21,000 to mine a Bitcoin. And with 3 megawatts with S21 variants at today's hash rate, you're looking around 2.5 Bitcoins every 3 megawatts per
Right.
month. Per month.
Per month, right. Okay, that's what I was going to ask you. Okay, so 3 megawatts, sorry, 3 megawatts, did you say 2.5 Bitcoins per month?
Yeah.
Right, okay. And that's and each of those bitcoins is going to be a 21,000
It's costing us in
dollar cost.
OPEX, yeah, including our
Yeah.
electricity costs, um, and site OPEX. We've got a couple of other overheads here in London, but very minuscule.
Yeah, okay. So you're looking at today's Bitcoin price then of something like just shy of $70,000 per
Yeah,
Bitcoin.
about $90,000, I think.
Yep.
87, yeah, 87,000.
Yeah, yeah. So something like just sort of 65,000 to today's prices
Yeah,
times 2.5 per month. So that's a healthy if you mine at that rate, that's a healthy amount of
yeah,
cash. Well, I
yeah,
say cash, but Bitcoin on the
yeah,
balance
yeah,
sheet. Yeah.
yeah,
Okay, yeah. Okay, well, what will your business model and growth strategy be going forwards then? Because obviously, you've said what the starting point is and what you're looking to
yeah,
mine per month and that. But how do you scale this? What are your plans to ramp this up? Now, I don't know how many, if you like, fields or sites there are in
yeah,
Texas, but I mean, say there were,
yeah,
they were unlimited. What are your plans to
yeah.
actually grow the business? Would that be like incrementally fundraising or grow it organically from recycling some of the Bitcoin money?
I think look, touching upon the gas or the gas fields,
Mm,
um, stranded gas. If we were to stick to this strategy, throughout the next 10 years, let's say,
mm,
stranded or economically stranded or surplus energy, there's 10 times more stranded gas in the world that gets flared every year or vented every year than it would take to power the entire Bitcoin network. So there's plenty of supply of wasted energy out there.
Okay.
So we stick to that model. We keep growing. I think our ultimate goal is to put as many megawatts online as fast as possible.
Mm,
So it would be rapid growth would be our long-term strategy.
mm,
And geographically, I don't think it wouldn't just be the United States. We'd be looking sort of all over.
yeah.
Yeah.
Okay, I mean, so in like, I mean, don't have to be firm numbers, but I mean, like for example, would you like to say you're going to mine next year 24 Bitcoin, right? Would you like to say would you do you have an idea of say in 5 years' time you'd like to be mining 240 Bitcoin, or have you got something
Yeah.
thoughts in your head about how that scale could
Yeah.
materialize?
I think our internal target is by 2027 to have 150 megawatts online. Um, in terms of raising money, I think we would look at potentially rolling over a lot of the money that we generate
Mm.
into adding megawatts, but also a secondary raise. I don't think we're going back to capital markets for that raise. I think we'd look at either doing debt or some sort of other structured product, maybe a convertible.
Yeah, is that debt? I mean, that debt can be, I suppose, can it be backed or collateralized by Bitcoin itself?
Yeah, that would be the
Yeah,
idea. That would be
yeah.
the idea.
Okay, so a lot of almost like a sort of like self-feeding machine, if you like. Okay. So you said 150 megawatts there. So I'm not very good at doing the maths in my head, but if you're saying 3 megawatts, 2.5 Bitcoin a month, I mean, you're talking about a serious amount of Bitcoin being mined per month if you can achieve those plans, right?
Yeah, it would be significant. It would be a significant amount. And I think it's a very achievable target. We've got the know-how, we've got the assets that we know we can move into. Um, we've got good supply chains for our generators and the
Mm,
gas turbines. Um, for procurement, machines are widely available. I think yeah, it's just would be producing launching phase one, phase two successfully, and
yeah,
then raising capital for stage three for
yeah.
larger facilities.
Okay. All right. Well, obviously, every successful business requires a strong and experienced management team. Can you just tell us a little bit about your experience in the field, and how how that would translate into your ability to execute the strategy?
Yeah. So I started Bitcoin mining in 2018 with my business partner Dragon.
Mm,
He's also our COO and CTO.
yeah.
We started on grid mining in 2018 in Reidar in southern part of Norway. Uh, it was a 2.5 megawatt site we started with, and originally it was just mining his machines. Uh, and during I think 2020, we got a
Mm,
call from a friend of a friend saying, "Hey, do you have any more space left?" And he wanted to add machines, and we thought, okay, we could turn this into a business, and expanded across 3 sites across Norway, just shy of 30 megawatts on grid power. And then 2023 came, we were applying for a tender for a local substation, one of the municipalities,
mm,
and we got rejected. And it was really, really hard to grow in Norway. So we started to look further afield and spoke to one of our brokers, and he suggested going to Texas. Um, we went to Texas January of that year. And when we were speaking to the broker, he was asking what we're looking for, and we just said, the cheapest electricity possible. And it was his suggestion, if you really want cheap electricity, make it yourself. And that's how we ended up building our first natural gas site in Texas in 2023.
right.
We've built a few more since then. Um, and now studying digital, we're basically going to cookie cutter our experience, what we've done before,
Mm,
and mine Bitcoin for ourselves this time instead of building it for third parties.
right. Okay. So, I mean, is there going to be a bit of a bun fight? I mean, like, obviously, you found something novel, a good electricity source. I mean,
Yeah.
obviously, the cost of the mining OPEX is
Yeah.
low. The
Yeah.
profits today's Bitcoin are, the margins are enormous.
Yeah.
Is there going to be a bun fight for these resources in Texas,
Yeah.
or is there plenty for everyone?
I think that look, there's plenty for everyone because there's just so much more gas that gets, even if just stranded gas, there's so much more than the entire Bitcoin network would need to power itself.
Yeah,
But I think we're going to see so many more companies now moving to behind the meter or off-grid energy sources. A,
yeah,
because grids it's a tough constraint for grids to keep unloading 100, 200, 300 megawatts at a time. Um, that's one factor. And then you've got the other factor where you sort of control your own destiny when you're behind the meter. You don't have to go to grid constraints. You don't need to enroll into curtailments. Um, it's obviously much cheaper. It's much more difficult, but for that you get rewarded in this really, really cheap energy. So I think you're going to see more and more companies moving into this sector. Um, I don't think that there will be. I think you'll see some producers that will overestimate the value of their natural gas in the short term. Uh, so that might increase prices, sh- you know,
mm,
for a couple of years. But I don't think over a long period of time it could sustain because there's just so much natural gas out there, and it's a
yeah,
great energy source.
yeah. Okay.
Yeah.
I mean, Guy, what attracted you to Sterling? Are you in the game as well, so to speak, or have you...
Yeah, my background's a city. I was 20 years in equity derivatives,
Mm,
and then corporate finance. I did various bits and pieces with small startups from private jet broking through to cannabis and hemp cultivation in Holland. And I also did a little bit of consulting work about 4 years ago with Ethereum miner in Iceland. They were there for the use of geothermal energy.
mm,
Um, and I met with Stefan, and although our paths had never crossed our careers, he's a little bit behind me. I've got a few more years on him, but our careers are relatively similar in an entrepreneurial way. He had a
mm,
own battery business as did I, and a couple of other bits and pieces where we had a similar experience. I was looking to get involved with crypto. I've been doing bits and pieces on the side with it, and I just think at the end of the day, the name of the game really with Bitcoin mining is the energy input. If you can find a way of reducing that, that's about 80% of the cost of a Bitcoin. If you can find a way of reducing that to near zero, which is what we do at Stone Digital,
mm.
then as long as you can execute the plan, which is relatively straightforward because there's not a lot of moving parts in it. It struck me as a very interesting project.
Mm.
It's a bit unusual to be listed at the stage of development that we are. Typically, you'd probably keep the business private, but Aquis have made a drive to try and get a presence in the crypto world in the UK, and there were a couple of businesses that pivoted to treasury models over the summer, and we thought we'd try and make the most of that opportunity. So
Mm.
we're a startup business which is with a quote, and it's going to take a little bit of time to get everything working. But once it does, I think we can be quite innovative with the way we expand the business. As Stefan said
Mm.
earlier, we could probably do some quasi debt. That's kind of where I come in. I had a lot of experience trading convertibles and stuff like that over the last couple of decades. Um, so that's kind of what I bring to the party. We'll see once we start to build up our treasury and we've got some assets on the balance sheet. I think we can do some pretty interesting stuff, and that should just benefit the equity of the business. I think the compounding effect of the cheap Bitcoin we get onto our balance sheet, could give us some serious equity upside. So I
Mm.
think that's really the uh, the the nub of it, and that's what attracted me to the business really.
Yeah. So basically, Stefan and Dragon are sort of the techies, if you like, and you're sort of
They
the
are very
corporate
much the
side and the
techies.
financial side, but you need
Exactly
both
right.
to run a company. So that's
Yeah,
that's
and the grey
fantastic.
hairs.
Yeah. Okay. Okay. Look, well, it's been great chatting, guys. it's an exciting space. It's a novel space, and if you pull it off, the margins are well, as we've discussed, significant. And for I don't know, I think you're about a 6-7 million market cap company. You could soon be producing Bitcoin well above that, if you like. So it'll be interesting to see how things evolve. I know that you're now looking at the getting the equipment and bringing the first miners online in the new year. So perhaps you'll come back and talk to us again when you're close to or up and running.
Yeah, that'd be great. Thank you.
Right.
Okay, well, thanks a lot, guys.
Thank you very much, Darren.
Cheers, Aaron.